Welcome to the Shifted Ledger, the podcast where we break down complex topics related to streamlining your workflow.
And today, we're really getting into something that fundamentally changes everything we know about financial systems.
Exactly. We are framing this entire discussion as an episode titled Beyond the Ledger: Artificial Intelligence, Knowledge Graphs, and the New Era of Accountancy.
It's quite a title, but honestly, it fits perfectly.
It does. And I mean, our mission for this deep dive is to really explore exactly how artificial intelligence and these vast structured data sets are transforming the very DNA of accounting.
Right, and auditing, too.
Yeah, auditing and particularly global tax administration. Because I want you to imagine something for a second. Imagine finding out you owe the government tens of thousands of dollars.
Which is terrifying on its own.
Right, exactly.
Yeah.
You owe tens of thousands, you lose your home, and your entire life is just completely upended. And imagine this happens not because a human auditor painstakingly reviewed your files and found a deliberate crime, but because an automated computer algorithm decided that you missing a single signature on a routine form was basically indisputable evidence of intentional malicious fraud.
It sounds totally dystopian.
It sounds like science fiction, but it is a very real scenario that actually collapsed an entire European government recently.
Right, the Dutch scandal.
Yeah, we'll get into that later, but it highlights this massive silent shift happening right under our noses. I mean, the traditional spreadsheet, the quiet ledger that businesses and governments have relied on for centuries to track trillions of dollars, it's being replaced.
It's being entirely replaced.
Replaced by something totally autonomous, incredibly powerful, and frankly, a little unpredictable.
Yeah, we are basically looking at the death of the flat ledger. The financial world is abandoning those two-dimensional rows and columns,
Right, the standard Excel sheet.
Exactly. They're adopting this multi-dimensional, constantly shifting web of data governed entirely by machine learning. So we're moving from humans crunching the numbers to humans basically desperately trying to govern the bots that crunch the numbers at light speed.
It's a huge shift. And whether you are a financial professional listening to this trying to implement new tools into your daily workflow, or a tax administrator designing these massive systems to safeguard a nation's revenue,
Yeah.
or even just someone fascinated by how global entities track wealth, this deep dive is going to map out that new automated frontier for you.
It is a transformation that touches literally every piece of the global financial ecosystem.
Yeah.
I mean, we're fundamentally shifting away from execution and moving entirely into analysis.
Okay, let's unpack that. Execution to analysis.
Yeah, so historically, the accounting and auditing professions have been trapped by execution.
Right.
Manual data entry, reconciling endless rows of disparate data, and basically relying on random statistical sampling just to survive an audit season.
Just grinding through the paperwork.
Exactly. But now we are entering an era of 100% data review and predictive risk modeling. It completely alters this cat-and-mouse game of fraud detection and tax compliance.
Which is fascinating. And in the industry literature, this transition is actually often described as delegating the 4Ds to artificial intelligence.
Ah, yes, the 4Ds.
Yeah, we are talking about the dirty, dull, difficult, and dangerous work.
I mean, think about the day-to-day grind of a junior auditor or a corporate accountant over the last 40 years.
Oh, man.
Right. A massive portion of their time was spent monitoring endless streams of emails, standardizing messy data sets that they pulled from ancient legacy software systems.
Just copying and pasting for hours.
Exactly. And manually extracting basic line items from like thousands of PDF invoices.
Yeah.
That represents the dull and dirty work. It's highly repetitive.
And prone to human error, I would imagine.
Highly prone to human error. And honestly, it's a terrible allocation of highly trained human intellect. So when you deploy AI as a digital assistant, it absorbs those tasks entirely. It frees up the professional to look at the macroeconomic picture, to strategize, and to actually analyze what the numbers mean for the business.
Which makes sense. But to understand how radical this is, I think we really have to look at the contrast with traditional auditing methods.
Right, the old way.
Yeah, because in the traditional model, auditing basically meant relying on a random statistical sample. So a multinational corporation might process 10 million transactions in a fiscal year.
Sure.
A human audit team couldn't possibly review 10 million invoices.
No way.
So they would take a statistically significant sample, like say a few thousand transactions.
And you cross your fingers, basically.
Right. You just hope your random sample is representative of the whole. And more importantly, you're hoping you didn't miss a cleverly hidden fraudulent transaction that just happened to fall outside your sample batch.
Yeah, it's a massive blind spot.
Hold on. Isn't that just like tasting one single spoonful of soup to judge a massive industrial-sized pot?
That's a great analogy, actually.
Because you just assume that if the spoonful is perfectly seasoned, the entire 100-gallon vat is fine. But a bad actor isn't going to poison the whole vat. They're going to hide their fraud in a very specific, isolated pocket of the ledger.
Exactly. That is the exact vulnerability of statistical sampling. And it is precisely what the new AI reality eliminates.
Okay.
Because instead of taking a spoonful, you now have systems that analyze every single drop of broth simultaneously.
Every single drop.
Yeah. We're seeing platforms like MindBridge AI pioneering the use of ensemble artificial intelligence in financial auditing.
Ensemble AI.
Right. They completely discard the sampling method. Instead, they run 100% of a company's transactions through a gauntlet of statistical models, machine learning algorithms, and business rules to hunt for anomalies.
Wait, let's break down ensemble artificial intelligence, because that sounds like a bit of a buzzword.
It does.
What does that actually mean mechanically for the person running the audit?
Okay, think of it like a panel of specialized doctors diagnosing a single patient. If you go to a hospital, one doctor looks at your blood work, another looks at your x-rays, and a specialist reviews your family history.
Right. They all have a different focus.
Exactly. Each brings a different analytical framework to the table, and then they synthesize their findings to reach a conclusion.
Ah, I see.
Ensemble AI does the exact same thing, but with a ledger. It doesn't rely on one single algorithm.
So it's multiple AIs working together.
Basically, yeah.
Mm.
It might use a decision tree to check if a transaction violates a hard-coded business rule, while simultaneously using a neural network to look for unusual behavioral patterns.
Yeah.
And maybe a third algorithm to check for statistical deviations in the monetary amounts.
Wow.
So the algorithms essentially vote on the probability that a transaction is anomalous.
That's incredible. And the sources emphasize that a crucial part of this ensemble approach is unsupervised learning.
Oh yeah, unsupervised learning is where it gets incredibly powerful.
How so?
Because with traditional software, a human programmer has to write a rule. Like if an expense is over $10,000 and occurs on a weekend, flag it.
Right, a predefined parameter.
Exactly. But unsupervised learning models don't need those rules. You feed them hundreds of millions of rows of raw, unlabeled data, and the algorithm teaches itself what normal looks like for that specific company.
Oh, wow. It just learns the baseline on its own.
Yes, it maps out the baseline behavior on its own, and then it flags the outliers. It looks for patterns that human auditor wouldn't even think to search for.
That is wild. And this isn't just experimental tech confined to Silicon Valley startups either.
No, not at all.
The legacy giants of the accounting world have completely bought into this methodology. Like Deloitte has deployed this proprietary document analysis tool called Argus,
Right,
which uses machine learning to ingest and analyze incredibly dense, complex legal contracts to find financial anomalies. And PwC developed a system called GL.ai specifically to hunt for anomalies in general ledger data.
And they've reported it reduces routine task time by up to 40%, which is massive.
40% is huge. But what's really interesting is that this capability is rapidly trickling down to the small and medium enterprise level, too.
The democratization of this technology is moving incredibly fast right now.
Yeah.
I mean, a small accounting firm or even just an independent bookkeeper can now use software tools like
Expert, right.
Yeah, which deploys over 80 different machine learning algorithms to continuously scan accounting files 24 hours a day, 7 days a week.
So they don't even have to initiate the scan.
Exactly. It just runs. It catches duplicated invoices, incorrect tax codes, or mismatched supplier details the absolute moment they happen.
But all of these algorithms, whether it is Deloitte's massive enterprise system or a small business tool like Expert, they rely on a fundamental mechanism called feature extraction from unstructured data.
Yes, feature extraction is key.
So how does a computer algorithm actually look at a messy, disorganized reality and turn it into something it can run math on?
Right. Well, to understand feature extraction, we have to look at how much of our financial world is actually unstructured.
Which is most of it, I assume.
Pretty much. A clean digital spreadsheet cell is structured data. The computer knows exactly what it is.
Okay.
But a handwritten invoice, a densely worded 50-page lease agreement, a scattered email thread negotiating a price, or even a public social media post. That is all unstructured data. It's completely chaotic.
So feature extraction is the bridge between the chaos and the ledger.
Precisely. The AI uses techniques like computer vision and natural language processing to essentially read that chaotic data.
Read it how?
Okay, so if you upload a photograph of a crumpled coffee-stained receipt, the computer vision identifies the text.
Right.
The natural language processing then analyzes the context to figure out that, the date is a date, the string of letters at the top is the vendor's name, and the number at the bottom is the total amount.
Oh, so it's not just seeing text, it's understanding what the text represents.
Exactly. It extracts those specific features and pulls them out of the image.
And then it builds those extracted features into what the industry calls a knowledge graph. This is another term that pops up everywhere in the research. If we are moving beyond the traditional flat spreadsheet, what exactly does a knowledge graph look like?
Okay. Visualize a massive three-dimensional spider web.
Okay, spiderweb.
In a traditional spreadsheet, a transaction is just a single isolated row of text, right?
Right.
In a knowledge graph, that transaction becomes a node in the web, and then the AI draws connecting lines called edges between that node and literally everything else it relates to.
Oh, I see.
It links that single purchase to the vendor's global corporate structure, to the IP address of the laptop used to make the purchase, to the historical buying habits of the employee who made it, and even to real-time market prices for that specific good.
So it turns a flat line item into this massive interconnected web of context.
It creates a living, breathing map of relationships. This allows the AI to spot risk not just in the numbers themselves, but in the actual relationships between the numbers.
Give me an example of that.
Sure. So if an employee approves a vendor invoice and the knowledge graph reveals that the vendor's registered corporate address is exactly the same as the employee's home address,
Oh, wow.
right? The system instantly flags it as potential embezzlement. A human auditor looking at two totally different spreadsheets might never make that connection, but the knowledge graph sees the relationship instantly.
That's incredible. But it brings up a massive operational question, though.
What's that?
If the AI is analyzing every single drop of the broth simultaneously and mapping out millions of interconnected relationships, doesn't that inherently backfire?
How do you mean?
Well, if I am the human auditor governing this bot and it flags every single tiny typo, every slightly unusual but perfectly legal weekend expense, and every minor geographic discrepancy, I am going to be buried under an absolute mountain of false flags.
Oh, yeah, absolutely. You are describing alert fatigue.
Alert fatigue.
Yeah, and it is honestly the single biggest operational tension in the field right now.
Mm-hmm.
If a detection system is tuned to be hypersensitive, it becomes effectively useless because the human operator just starts ignoring the alerts.
It's the boy who cried wolf.
Exactly. It is the boy who cried wolf, but at algorithmic scale.
So how does the profession solve for the boy crying wolf? I mean, if the AI can see everything, how do we stop it from panicking over nothing?
The solution is really the evolution of the human professional.
Okay.
See, the AI isn't replacing the CPA. It is forcing the CPA to evolve from a number cruncher into a strategic advisor and basically a context provider.
Context provider.
Right, because the algorithm lacks business context and professional skepticism. Let's say the AI flags a sudden massive spike in legal expenses for a specific quarter.
Okay.
To the unsupervised learning model, that is a severe statistical anomaly and a high-risk indicator.
But the human auditor sitting at the desk knows the company just went through a hostile takeover bid or they acquired a smaller competitor. So a massive spike in legal fees is exactly what should be happening.
Exactly. The human provides the ethical judgment and the situational awareness that the algorithm fundamentally cannot grasp.
Right.
The human must tune the parameters, investigate the complex flags, and dismiss the operational noise based on real-world context. The human is the vital final filter.
Okay, so corporate auditors are using this capability to review 100% of their data, catch internal errors, and prevent embezzlement.
Yes.
But if corporations have suddenly gained the superpower to see every single anomaly in their own ledgers, the governments that collect revenue from those corporations aren't just going to sit back and trust the math.
Definitely not.
Which brings us to the core of our exploration today for you, the listener. How global tax administrations are deploying these exact same massive knowledge graphs to hunt down tax evasion and fundamentally alter how they collect revenue.
Right, and tax administrations are uniquely positioned to leverage this technology.
Why is that?
Because their entire operating model has always been about collecting and analyzing vast amounts of data. They possess historical income filings, property registries, digital payment network data, international customs records. For decades, that data just sort of sat in siloed databases.
Just gathering digital dust.
Exactly. But now they're feeding it all into AI-driven knowledge graphs, and frankly, they're weaponizing it.
The shift from defensive auditing to proactive hunting is staggering. Let's look at how this actually manifests in the real world, starting with France.
France is a great example.
Yeah, the French tax administration, the DGFIPI, they launched an initiative called the Innovative Land Project. And this isn't just about scanning financial documents. It involves a massive collaboration with the French National Geographic Institute to analyze public aerial and satellite imagery.
This is a brilliant, though honestly highly controversial application of computer vision at a national scale.
Yeah.
The French tax authorities realized that countless citizens were building swimming pools, property extensions, and luxury additions without declaring them.
Which means they were avoiding the corresponding increases in their property taxes.
Exactly. So instead of sending inspectors door to door, which would take forever, they literally deployed an AI to scan the country from space.
Which is mind-blowing. How does an algorithm actually find a tax cheat in a satellite photo?
Well, the AI is trained on thousands of labeled images of what a swimming pool looks like from above.
Okay.
So it learns to recognize the specific blue hues, the rectangular or kidney bean shapes, and even the shadows cast by the edges.
Wow.
Yeah, and then the algorithm scans the aerial imagery of entire French municipalities, drawing digital outlines around every single structure and pool it detects.
And then it cross-references that spatial data with the tax ledger.
Exactly. It takes the geographic coordinates of a newly detected swimming pool and instantly checks the National Cadastre, the land registry.
To see if the property owner at those coordinates has actually declared a pool on their tax filings.
Right. And if the aerial image shows a pool, but the tax file shows an empty backyard, the system instantly generates an automated tax reassessment and sends the homeowner a bill.
It's astonishingly efficient. But it's not just France deploying this kind of spatial analysis. The sources note that Greece's Independent Authority for Public Revenue, the IAPR, is executing a very similar strategy to geolocate undeclared swimming pools across their territory.
Yeah, Greece is doing it too.
But Greece is actually taking the algorithmic dragnet much deeper, specifically into complex high-fraud sectors like the fuel market.
Right, the Greek fuel market has historically been a significant vector for tax evasion and smuggling.
Okay.
So to combat this, the IAPR hasn't just deployed one tool. They have built a pattern-detecting AI that ingests data across over 100 different risk criteria simultaneously.
Walk us through what that actually looks like on the ground. Like, what kind of criteria is the AI analyzing to catch a fuel smuggler?
The knowledge graph in this scenario is incredibly complex.
Okay.
The AI is analyzing the stated delivery manifests submitted by the fuel companies.
Right.
Then it cross-references those manifests with the real-time GPS tracking data of the tanker trucks on the highway.
Wow, so it knows where the trucks are.
Exactly. And it monitors the digital sensors on the fuel pumps at the gas stations to measure exact volumetric outputs. Plus, it analyzes the financial transactions flowing through the point-of-sale systems.
So it's looking for contradictions in physical reality.
Precisely. If the GPS data shows a tanker truck stopping at a rural location for 2 hours, but the delivery manifest claims the truck drove nonstop to a licensed depot, the AI flags a high probability of illegal fuel offloading.
That's brilliant.
Or if a gas station's digital pump sensors show they dispensed 10,000 liters of fuel in a week, but their tax filings only claim they sold 5,000 liters, the anomaly is caught instantly.
It totally turns auditing from a backward-looking reactive exercise where, an inspector might look at the books 3 years after the crime into a proactive real-time dragnet.
Right. It creates a system where hidden connections are illuminated instantly.
Yeah.
Consider a classic evasion scenario.
Right.
An individual claims extreme poverty on their annual income tax return. Historically, unless a whistleblower came forward, that might slip through. But today, the tax agency's AI connects their poverty claim to their digital footprint.
Using the knowledge graph.
Exactly. The knowledge graph reveals they recently purchased a luxury yacht through a shell company. Their passport shows frequent international travel to tax havens, and the satellite imagery shows an undeclared swimming pool at their primary residence.
So the risk score skyrockets before a human auditor even opens the file.
Exactly.
I have to admit, it sounds like an incredibly effective digital neighborhood watch in the sky, but it also sounds deeply dystopian.
It does have that Big Brother feel to it.
Right. I mean, if the algorithm is constantly vacuuming up data points and looking for any deviation from the norm, how does it distinguish between a clever fraudster actively structuring transactions to hide money and an innocent taxpayer who just made a weird but entirely legal financial move?
That right there is the most critical question facing modern tax administration.
Because the AI doesn't know intent right.
Right. An algorithm doesn't intrinsically know the law. It only knows math and patterns. This is why tax agencies cannot rely purely on unsupervised learning for final enforcement actions.
Okay.
They must rely heavily on supervised machine learning to instill legal logic into the system.
Let's break down supervised machine learning in a government context. How do you teach a machine the actual nuance of tax law?
You teach it by having it mimic human experts.
Mimic them.
Yeah. Let's look at the AI litigation project in Brazil, which is a massive case study in the sources.
Right.
The Brazilian administrative tax courts were drowning under a staggering backlog. They had $140 billion worth of tax appeals waiting for decision.
140 billion.
Yeah, and it was taking an average of 6 years just to get a ruling on a single case. The system was functionally paralyzed.
So they deployed supervised machine learning to clear the logjam?
Yes. They didn't just unleash an algorithm to make blind decisions, though.
Yeah.
They took thousands of historical resolved tax appeal files that human judges had already painstakingly reviewed and labeled.
Oh, I see.
They fed these labeled files into the AI, effectively saying, here is what a complex, valid legal argument looks like, according to our best judges, and here's what a frivolous stalling tactic looks like.
So the algorithm learns the underlying human logic by studying the precedents.
Exactly. Once trained, the AI was unleashed on the backlog. Now it doesn't make the final legally binding ruling.
Right, that would probably violate due process.
Exactly. It would violate due process entirely.
Yeah.
Instead, it acts as an incredibly advanced triage system.
Okay, triage.
Yeah, it reads the incoming appeals groups, similar legal arguments together, and routes them to the specialized human officers equipped to handle them.
And the results were pretty dramatic, right?
Very. The sources indicate it sped up court decisions with over 80% accuracy in its categorization.
80%?
Yeah. It organized the chaos based entirely on human-taught precedents. It allowed the human judges to stop wasting time sorting paperwork and start focusing entirely on applying the law to pre-organized case bundles.
So while these predictive systems are highly effective at catching active evasion and sorting through massive litigation backlogs, there is another entirely different philosophy emerging among tax agencies.
Okay.
It is the realization that launching a massive audit, issuing penalties, and fighting through appeals is incredibly expensive and antagonistic.
Oh, yeah. It takes a lot of resources.
Right. So it's actually far cheaper to stop a mistake from happening in the first place.
Oh, absolutely. This is where we see AI being deployed not as a weapon, but as a behavioral tool.
The behavioral tool.
Yeah, tax agencies are utilizing AI to gently steer honest citizens toward compliance before an error even makes it onto the final ledger. Improving the taxpayer experience isn't just about good public relations. It is a highly calculated strategy to increase revenue collection.
It's utilizing the carrot instead of the stick.
Exactly.
Because if you make it easy to pay taxes, more people will actually pay them. The sources highlight Singapore as a prime example of this strategy.
Singapore's done some great work here.
Yeah, the Inland Revenue Authority of Singapore uses a digital assistant. It's a chatbot named Vika. But in 2023, they massively upgraded Vika by integrating a large language model, or LLM.
The distinction between a traditional chatbot and an LLM is totally vital here.
Let's explain that for the listeners.
Right, so a traditional chatbot operates on a rigid click menu.
Yeah.
You can only ask it questions that the programmers specifically anticipated.
And if your question doesn't fit, you're just out of luck.
Exactly. If your question doesn't fit the pre-written menu, the bot fails and frustrates the user. An LLM, like the architecture powering tools like ChatGPT, understands the semantic intent of complex conversational human language.
So a taxpayer in Singapore can type a messy, poorly phrased question about their specific tax situation, and the AI actually understands what they are trying to accomplish.
Yes. It doesn't just answer questions, it executes transactions.
Wow.
Yeah, the data shows that the VK system handled 70,000 transactional queries in a single year.
70,000.
Right, it allowed taxpayers to check their account balances, negotiate and set up installment payment plans, and execute payments seamlessly within the chat interface. It saved taxpayers an estimated 10 minutes per transaction.
And the behavioral economics of that 10-minute saving are massive.
Huge.
Because by reducing the friction and the sheer annoyance of interacting with the tax authority, baseline compliance naturally rises. People are way less likely to procrastinate or abandon the process if the AI holds their hand through it.
Definitely. But the Australian Taxation Office, the ATO, has taken this proactive behavioral approach a significant step further.
Oh yeah, the ATO system is fascinating.
They aren't just answering questions. They have integrated real-time anomaly detection directly into the filing process itself.
Yeah, this is one of the most fascinating mechanisms detailed in the research. In Australia, when an individual logs in to file their annual tax return, the ATO already pre-fills large sections of the form.
Right, using massive data pipelines connected to employers, national banks, and health insurance providers.
But the truly innovative part happens while the taxpayer fills out the rest of the form. The AI is actually watching the keystrokes in real time.
It is continuously running the taxpayer's manual inputs through its predictive models.
Okay, give me an example of how that works in practice.
Let's say a taxpayer is filling out the section on capital gains or interest income. They enter as 0.
Okay, zero interest income.
The AI instantly queries its knowledge graph and sees that this specific taxpayer's historical profile, their banking metadata, and their demographic group strongly suggest they should have some level of interest income to declare.
So it knows zero is probably wrong.
Exactly. So the AI instantly generates a prompt right there on the screen. It interrupts the user mid-filing.
Just completely pauses them.
Yeah, it generates a polite but highly targeted message. It initially says, "Our models indicate you have not reported any interest income. Please review your records and ensure any interest earned has been fully reported before submitting."
It is quite literally a spell check function, but for your taxes.
That's a perfect way to describe it.
Right, because if you are typing a document in a word processor and misspell a word, it puts a red squiggle under it. It doesn't force you to change the word, and it doesn't automatically rewrite it for you, but it highlights the potential error and asks you to double check.
Yes.
The Australian system just puts a red squiggle under your math.
It is the perfect application of a behavioral nudge. And the return on investment for this specific mechanism is just astounding.
What were the numbers on that?
Well, the sources note that in a single filing year, the ATO issued 636,000 of these real-time prompts.
Over 500,000 prompts.
Yeah. And by simply pausing the user and asking, "Are you sure about this number?" the system protected approximately 78.9 million Australian dollars in revenue.
Wow, 78.9 million.
Yeah, revenue that would have otherwise been lost to honest mistakes or casual omissions.
It corrects the honest mistakes, instantly saving the agency the cost of a future audit, and it sends a very clear, chilling signal to intentional bad actors that the algorithmic eye is indeed watching their every input.
It is highly effective. But the spell check analogy forces us to confront a terrifying reality.
Which is?
What happens when the underlying dictionary of the spell checker is fundamentally flawed?
Wait.
What happens when the AI is nudging, targeting, or outright punishing the wrong people based on hidden criteria? The incredible scalable power of these predictive algorithms brings us directly to the dark side of the ledger.
Yeah, we have to talk about the real-world failures because the risks of automating tax administration are profound and the ultimate cautionary tale. I mean, the absolute nightmare scenario for any government deploying these systems is the Toeslagenher, the child benefits scandal in the Netherlands.
The Dutch scandal is arguably the most significant catastrophic failure of automated government risk profiling in modern history.
It really is.
Between 2005 and 2019, the Dutch Tax and Customs Administration deployed a self-learning algorithm designed to detect fraud in the distribution of childcare subsidies.
And the results were totally devastating. The algorithm wrongfully accused approximately 26,000 innocent families of intentionally defrauding the government.
26,000 families.
Mm-hmm.
To understand how this happened, we have to look back at the tension you brought up earlier regarding the AI flagging every minor error.
Right, the alert fatigue issue.
Exactly. The Dutch algorithm was designed to be incredibly aggressive, and it began skewing its risk assessments based on administrative minutia.
What kind of minutia are we talking about here?
Okay, so if a parent submitted an application for childcare benefits and the form was missing a single signature or maybe a secondary piece of documentation was slightly delayed, the algorithm didn't flag it as a clerical error.
Which is what it was.
Right. It categorically interpreted that minor administrative failure as evidence of intentional systemic fraud.
But the algorithmic failure was compounded by something much darker.
Oh, yeah.
The system wasn't just rigid, it was structurally biased. The algorithm learned to disproportionately target families with dual nationalities, lower incomes, or migrant backgrounds.
Yes. And why did it do that? Because historical data contained biases from human caseworkers who scrutinized migrant families more heavily.
So the supervised learning model basically ingested that human bias.
It codified it as a mathematical rule, and applied it at scale.
The human toll cannot be overstated. I mean, these families were not just denied future benefits. The system demanded immediate repayment of years' worth of subsidies.
We're talking about demands for tens of thousands of euros delivered automatically with zero human review.
People lost their homes. They were driven into inescapable debt, marriages dissolved under the financial stress, and in extreme cases, children were actually removed from their parents' custody because the algorithmic debt plunged the families into absolute destitution.
That's horrific.
It is. The sheer scale of the systemic injustice was so severe that when it was finally fully uncovered, the entire Dutch cabinet was forced to resign.
It totally collapsed the government.
It did.
And this tragedy perfectly illustrates a core concept in the literature, which is the magnification effect of AI.
The magnification effect.
Yeah, if a human caseworker is prejudiced or poorly trained or simply exhausted, they might unfairly deny a handful of applications a day. Their capacity to inflict harm is strictly limited by the speed of human labor.
Right, there's a bottleneck.
Exactly. But an automated bot operating without human oversight magnifies that single bias millions of times over in a fraction of a second.
It basically industrializes the bias.
It absolutely does. And the Dutch scandal also highlights the critical danger of the black box problem.
Yeah, let's talk about the black box.
When citizens tried to appeal the demands for repayment, they asked a very simple legal question. Why did the computer flag me as a fraudster?
And the government couldn't answer them.
They literally couldn't.
Because the deep learning models had become so complex, even the software developers who built the system couldn't map out the exact mathematical path the AI took to reach its conclusion. The algorithm had become a total black box.
Right. And if a citizen's life is being destroyed by an administrative decision, and the government's only legal defense is, well, we don't know why, but the computer said, so you have fundamentally broken the rule of law.
Completely.
Citizens have a fundamental democratic right to understand the mechanics of the decisions made against them so they can challenge them in court.
It's terrifying, but, it isn't just flawed, biased algorithms destroying innocent lives that administrators have to worry about. The AI arms race works both ways.
Oh, it definitely does.
The criminals aren't just sitting back and letting the tax agencies catch them. They are actively weaponizing the exact same AI tools to manipulate the ledger.
The landscape of AI-assisted fraud is evolving at breakneck speed right now. Forensic accountants are warning that organized crime syndicates and state-sponsored actors are deploying generative AI to launch sophisticated attacks against corporate ledgers and tax systems.
And the sources detail how they use generative AI to create massive volumes of entirely synthetic transactions.
All right, synthetic transactions.
They aren't just doctoring real invoices. They are commanding AI to generate perfectly formatted, mathematically consistent fake invoices, complete with synthetic supplier histories and forged email chains validating the purchase.
It looks completely real to the naked eye.
Exactly. They're even using deepfake audio and video to bypass biometric security protocols.
And there is a highly alarming detail in the research regarding North Korean operatives specifically.
Oh yeah, this part was wild.
According to reports from AI firms like Anthropic and investigations by the BBC, state-sponsored operatives from North Korea have utilized generative AI models to construct highly convincing, entirely fabricated professional personas.
To do what exactly?
To apply for remote technology jobs at U.S. Fortune 500 companies.
That's insane.
The AI generates the resumes, it scripts the interview responses, and it fabricates the digital footprints.
Yeah.
Once hired, these operatives infiltrate the corporate networks, funnel salaries back to the regime, and potentially lay the groundwork for massive corporate espionage or ransomware attacks.
So the AI allows them to just bypass traditional identity verification at scale?
Exactly.
Which introduces a fascinating and highly critical concept raised by forensic accounting experts in the research. The Sarbanes-Oxley or SOX analogy.
Right, the SOX analogy.
When the Sarbanes-Oxley Act was passed in the United States back in 2002, following the massive accounting scandals of Enron and WorldCom, it introduced strict standardized rules for financial reporting.
And policymakers believed SOX was the ultimate silver bullet that would eradicate corporate fraud forever.
Right.
But the reality of complex systems is much darker. Because the new regulatory rules were rigid, codified, and eventually understood by the industry, it provided perpetrators with a literal roadmap.
Wait, I see where this is going. It's exactly like speedrunners in a video game.
Explain that.
Okay, so if you play a complex video game long enough, you eventually memorize the digital boss's attack patterns.
Right.
The speedrunner knows exactly which pixel to stand on and exactly which frame to jump so they don't take any damage. They reverse engineer the game's code through trial and error.
That is a perfect analogy for modern financial crime.
Really?
Forensic experts warn that once financial criminals figure out the specific threshold and risk parameters of a tax agency's AI detection model, they will reverse engineer their crimes to slip exactly $1 under the AI's risk radar.
Oh, wow.
If they know the algorithm flags fuel discrepancies of 5%, they will program their synthetic fraud bots to siphon off exactly 4.9%.
So the system's own predictability becomes its biggest vulnerability.
Exactly.
How can an automated system remain chaotic and unpredictable enough to catch highly adaptive speedrunning criminals while simultaneously remaining transparent and explainable enough to protect innocent citizens from a Dutch-style black box disaster?
That tension right there, balancing unpredictable enforcement with transparent governance, is the central defining challenge of the next decade in finance.
It's a huge needle to thread.
We have to move aggressively away from simply implementing technology and focus entirely on implementing trustworthy governance.
Which perfectly sets up the final pillar of our deep dive: mapping out a blueprint for professional tax administrators and corporate auditors. How do we actually govern the machine?
Right.
Because if you are a professional tax administrator listening to this, you are effectively the architect of a digital fortress. You hold the keys to data privacy, systemic trust, and the economic security of millions.
And right now, that trust is facing a massive systemic deficit.
A trust deficit.
Yeah, professional auditors and tax inspectors are fundamentally trained for their entire careers to maintain professional skepticism. They are taught to trust nothing and verify everything independently.
Right, that's the job.
So walking into an office and being told to hand over the analytical keys to an autonomous, unexplainable AI creates severe psychological and operational friction.
I can imagine. So to overcome this trust deficit, the sources indicate that organizations are leaning heavily on standardized, rigorously tested governance frameworks.
Yes.
Two of the most prominent are the Institute of Internal Auditors AI Auditing Framework and KPMG's Trusted AI Approach.
These frameworks are designed to build a scaffolding of human control around the algorithm. They repeatedly emphasize four non-negotiable core principles:
Which are?
transparency, explainability, fairness, and accountability.
Let's break those down mechanically. Transparency means the organization must clearly define and document exactly what the AI's purpose is, what data it was trained on, and where that data came from.
Right, no secret databases.
But explainability is where we directly confront the black box problem.
Yes, explainability is increasingly referred to as XAI, or explainable AI.
XAI.
XAI mandates that when an algorithm flags a transaction or denies a citizen's tax appeal, the system cannot simply spit out a binary yes or no.
Right, like in the Dutch case.
Exactly. The AI must be designed to mathematically explain its own reasoning in a format that a human auditor can actually understand.
The research explicitly focuses on the concept of verifiability. What does verifiability actually look like on a modern auditor's dashboard?
Okay, so if the AI dashboard flags a high-risk discrepancy in the third quarter, accounts payable ledger, it cannot just show a red warning light.
Okay.
It must provide a transparent, clickable link directly back to the foundational source document.
Oh, so it connects the dots for you.
The human auditor clicks the flag, and the system pulls up the exact digital invoice, the corresponding email approval thread, and the exact lines of code or business rules that trigger the alert. It forces the AI to show its work step by step.
Just like math class. Show your work.
Exactly, show your work.
And naturally, when you are centralizing that much sensitive, interconnected financial data, I mean, millions of invoices, personal tax returns, corporate trade secrets into a massive knowledge graph, the security requirements become astronomical.
Oh, yeah, absolutely.
We aren't just talking about installing a basic firewall or updating passwords.
No, the cybersecurity demands are enterprise-grade and intensely regulated. Organizations must achieve strict compliance with international standards.
Like what?
For U.S.-based service organizations, that means achieving SOC2 Type 2 certification.
SOC2 Type 2.
Right, which proves they have continuous, heavily audited controls over data security and privacy. Globally, it means adhering to ISO 27001 standards for information security management.
And it isn't just about protecting the database from being hacked, it's about protecting the AI's brain from being poisoned.
Data poisoning is a huge threat.
Right. If a bad actor can infiltrate the training data and subtly alter the parameters of what the AI considers normal, They can create blind spots in the detection model for themselves.
Yes.
But even if you secure the data and you ensure the AI is explainable, how do you guarantee that the algorithm's decisions are actually perfectly aligned with the written law?
That is the ultimate hurdle right there. Historically, a government legislature passes a tax law written in complex legal language.
Great. Standard lawmaking.
Then a team of software developers reads that law, tries to interpret the nuances, and writes code that hopefully mimics the legislative intent.
But a massive amount of legal accuracy is lost in translation between the lawyer and the programmer.
It's basically a game of high-stakes telephone.
To solve this, the OECD report highlights a revolutionary paradigm shift called Rules as Code, or AIC.
Rules as Code proposes eliminating that translation gap entirely.
Oh.
Instead of writing laws in human language and translating them later, the legislation itself is drafted in machine-readable code at the exact moment of creation.
So the law literally is the code.
Exactly. The tax code is built as an executable software function. This ensures that when an AI system processes a tax return or flags a violation, it is directly executing the pure, uninterpreted law.
That's fascinating.
If a tax agency denies a child care benefit under a rules as code framework, the AI cites the exact line of executable code that triggered the denial. It eliminates the semantic ambiguity that allows black box discrimination to flourish.
That is profound. But hold on, if we are coding complex tax laws directly into software via rules as code, doesn't that completely change the nature of tax evasion?
How do you mean?
Well, does that mean future tax loopholes won't be discovered by slick corporate lawyers reading the fine print, but rather by software engineers actively looking for exploitable bugs in the government's code?
That is a highly probable and honestly widely anticipated scenario.
Wow.
The intersection of tax law, data architecture, and software engineering is becoming entirely blurred. The top-tier tax professional of 2035 will need to be as fluent in Python and system architecture as they are in corporate tax statutes.
And they are going to need that dual fluency to handle the massive tectonic shifts happening in global regulation right now, particularly the impending global minimum tax frameworks.
This is a perfect example of why these vast knowledge graphs are no longer optional for large corporations.
Right.
We are looking at the rollout of the OECD's Pillar 1 and Pillar 2 initiatives. Pillar 2 specifically imposes a strict 15% minimum tax on the global profits of large multinational enterprises, regardless of where they shift their profits.
To comply with a global synchronized minimum tax, a multinational corporation can no longer operate with disjointed regional accounting systems.
No, they can't.
The sources point out they are being forced to adopt a single source of truth for their tax master data.
They are achieving this centralization by deploying EPMs, or Enterprise Performance Management Systems.
EPMs.
These act as massive centralized data warehouses that ingest financial data from every subsidiary across the globe, standardizing it instantly to ensure compliance with the complex Pillar 2 calculations.
But the regulations aren't static. They are constantly shifting as different countries adopt different parts of the framework. So how does a corporation ensure their massive data warehouse stays compliant with laws that change every week?
They deploy generative AI to conduct what the industry calls horizon scanning.
Horizon scanning, it sounds like a radar system on a battleship.
It serves the exact same function, but for regulatory risk.
Okay.
The Gen AI is programmed to constantly monitor global legislative databases, court rulings, and tax authority publications.
Just constantly reading the news, basically.
Constantly. When a new regulation is published in, say, Germany, the AI instantly maps that new text against the corporation's existing internal data within the EPM.
Oh, wow.
It spots the compliance risks and calculates the potential financial impact instantly.
It reduces a regulatory review process that used to take human legal teams weeks of painstaking research down to a matter of minutes.
Well, literally minutes.
But despite all this automation, the horizon scanning, the automated ledgers, the rules as code, the literature, consistently returns to one fundamental safeguard.
Yeah.
The ultimate solution to the ethical dilemmas, the bias, and the systemic risks is the strict enforcement of the human-in-the-loop model.
The human professional must permanently remain the final arbiter of financial and legal reality.
Right.
The technology is evolving rapidly. It is no longer just a passive tool used to analyze the ledger. In many complex automated environments, the AI network essentially is the ledger, but it cannot be the judge.
Which brings us to the conclusion of our exploration today. We have covered a massive amount of ground in this deep dive.
We really have. We started by looking at how AI is absorbing the dirty, dull, and difficult work, completely discarding the old method of random statistical sampling in favor of ensemble AI that analyzes 100% of a company's financial transactions in real time.
We explored how global tax agencies are weaponizing these knowledge graphs, launching digital dragnets that use computer vision to literally track undeclared swimming pools from space,
Right, France and Greece.
and analyzing over 100 risk criteria to catch fuel smugglers. We saw how systems in Australia act as an active spell checker for your taxes, nudging citizens to fix errors mid-keystroke to protect millions in revenue.
But we also confronted the devastating ethical nightmares. We examined the catastrophic algorithmic bias in the Netherlands that ruined thousands of families and the critical ongoing arms race against AI-assisted fraud and synthetic deepfakes.
And we laid out the architectural blueprint required to survive this shift. The critical need for strict governance frameworks, SOC2 compliance, explainable AI, and rules as code to make these incredibly powerful systems trustworthy and verifiable.
Exactly.
The key takeaway for you, the listener, whether you are streamlining your own small business workflow, auditing a massive multinational corporation, or working inside a government tax agency to safeguard public funds, is that maintaining rigorous professional skepticism and ethical human oversight is absolutely non-negotiable.
Artificial intelligence is a brilliant, incredibly fast, and tireless assistant,
Right.
but it's not the master.
Right.
Your professional applying context and ethical judgment are the essential human in the loop. However, as we look to the future, we need to consider a concept rapidly emerging in the cutting-edge literature:
What's that?
agentic AI.
Agentic AI. Let's define that before we wrap up, because that implies a leap beyond what we've discussed.
Standard AI, even complex models, automates a specific bounded task, like extracting data from an invoice or flagging a geographic anomaly.
Right.
Agentic AI is fundamentally different. It doesn't just execute a task. It autonomously manages an entire multi-step objective.
Give me an example.
You delegate a high-level goal to it, such as investigate all accounts payable discrepancies for the third quarter and resolve them.
So it doesn't just flag the problem for a human, it actually acts on it.
Exactly. The agentic AI plans its own sequence of actions. It queries the database, drafts an email to the vendor, asking for clarification, reads the vendor's response, adapts its strategy based on new information logs into a different software tool to adjust the ledger, and manages the entire investigative case from start to finish without human intervention.
Wow. Which leaves us with a final, somewhat dizzying question for you to ponder.
Yeah.
As both massive multinational corporations and incredibly powerful government tax agencies rapidly adopt autonomous agentic AI, are we approaching a future where a corporate AI continuously optimizes and files the taxes, a government AI instantaneously audits them, and the two autonomous agents negotiate the financial settlement between themselves in milliseconds, with humans entirely removed from the financial loop? It's a crazy thought.
Will we eventually be forced to just trust the outcome of the digital X-ray? Until next time, keep optimizing your workflow on the shifted ledger.